Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, March 5th, 2020. I wanted to just kind of recap a lot of the levels that I've covered today. Remember, I'll keep this videos for subscribers only, so if you are a gold or silver member of the site, keep in mind that it's much more efficient for both me and you that I post updates throughout the day, and I'll usually thread those underneath in the comments section below the homepage post. So throughout the day, I've posted several updates, including earlier today. If you didn't catch those, some revised trend lines. So now we had a couple reactions earlier today. This is today's candles. There's yesterday's close right there. So we had 1, 2, 3 test on this level. So what that does is I draw the trend line down. I brought it down from where I had it. I always say this: the charts are dynamic, and so is my analysis. I mean, charts are constantly changing, so trend lines, support, resistance levels have to be tweaked. And so I put that up in advance, and we were on it at the time, and then we since broke down and posted an update when SPY started to take it out. And then what I said, what you want to see is a solid 60-minute close below, which we got. There's your confirming, there's your sell signal right there. Whether it sticks or not, we'll see. I'm going to cover some other levels to watch. NQ's at support now, but I just want to say these are the trend lines at this point in time that I think are most valid. There's 1, 2, 3 reactions, 4 reactions. That's Tuesday. And then today, 1, 2, 3 additional reactions on that trend line, followed by an impulsive break on SPY. This is Tuesday's low. So what you have here, Friday's low is obviously a very significant technical level. That's a major reaction low. And Tuesday's low, what that would do is call the current near-term uptrend into question. Remember, I talk about, try not to be confusing when I'll say, one trend might be bullish, another is bearish at the same time. This is our near-term uptrend since the lows on Friday. And we've still this was your last major, distinct reaction low. So we're still above it now. However, you broke trend, that calls that into question. PPO right now, I use that signal line. The white line there is a trend indicator. You have a bearish crossover in play. If we get any more downside, sometimes the lines cross. I'm talking about the PPO line. That's the blue line, and it made a bearish crossover there. That in itself is helps to confirm sell signals, just like a bullish cross here is a buy signal. And you can see, and I pointed this out before, just almost trading that alone can be a fairly effective strategy. Go short here. You had the bearish cross right there, and this PPO line right there, the blue line, stayed below the zero line that entire time, crossed above that signal line right there. It's saying, triggering a buy signal, and just now flipped to sell signal. However, I also like to look at this zero level right there, the dashed line, and I look at that signal line, the white dashed line, that's the curving line. When it's above that, it is bullish, and when it's below, it's bearish. But I mentioned this too, you get slight whipsaws. You don't have to take it down to the penny. And the key is when the trend, the near-term trend, at least on the 60-minute chart, is bearish, when that white line, signal line, is below, and then it's bullish when it's above, bearish when it's below. And so far, so if we do pop and this bearish crossover sticks, and we move back down solidly below, then that would just be considered a back test. However, we're above it slightly, and let's see if it holds. So I think it's a critical time for the market. That's why I'm doing this video. We have those sell signals there, but yet we're still above the previous reaction high. So although a trend line was broken, the trend itself, it's a little bit called into question if you want to get very technical, because part of an uptrend is a series of higher highs, and we failed to make a higher high there. That one was a little questionable. That was the Powell folly spike when the Fed came in with the emergency rate cut. But take it for what it's worth, the market failed to take that out yesterday, and so there we're at. So those are levels to watch. If we can't recover, if we do bounce back, look for a back test of that trend line to possibly come in as resistance. That may provide an objecting shorting level. And I did mention to somebody earlier today, I think if we get up here now, we could probably and should add another resistance level right around there on the Fed high right there, and yesterday's high somewhere in that area. If we get back up there, I don't think we will, but if we do, I think we'll probably pop it. We've already tested that level and failed twice. You get up there again, anything is possible, and we could fail there again. we'll just have to see how it morphs, how it plays out, how the charts develop. Do we come up there, back test this trend line at the same time, or do we drop now and not look back? And that's a very real possibility today. So I want to say this: sell signal triggered by that break of the trend line, sell signal triggered by the bearish crossover in the PPO. If we get that signal line coming down solidly below there, that will help confirm. And then if we take out Tuesday's low, that could open up that scenario I talked about where we just kind of waterfall sell down through there. We don't just meander on down to come in and test the previous lows. I think we'll probably see some more kind of panicked forced selling, liquidations, that kind of good stuff like we had back here. Good stuff if you're short, not so good if you're long. QQQ, all right, I posted a revised trend line. Really takes a form, if you look at it this way, a triangle pattern. You have a downtrend line that's a little more clear on QQQ. I couldn't find a comparable trend line that fit as well on SPY. So there it is. You have several reactions here, 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 and here. And then this was your uptrend line. Nice and clean. I mean, count the number of reactions, number of 60-minute candles. It hit it or if it came very close. 1, 2, 3. We won't even count that one. 4, 5, 6, and then a few more today. And boom, red candle. There's your breakdown, your confirming candle, and we've moved lower since. So right now, doesn't look good. It's not the nail in the coffin for the bulls, but it's certainly an additional check mark for the bearish case in that QQQ short trade we have. Breakdown below here about 209, and especially below the Tuesday's lows right here. This green candle should do the trick. There's your bearish PPO crossover on the 60-minute PPO of QQQ. And there's a signal line heading back down. So if it does, like I said, on SPY as well, this would just have been essentially a back test and a rejection of that level. Again, you don't have to take these levels to the penny, close enough to be considered a back test if we do reverse and move back down here. So still the favored scenario that I have. Let's look at the futures. For some levels to watch, and I'll get this video out to you guys quick. 8,700 I've had on this NQ chart, this 60-minute chart, for quite a while. It's been a pretty important level. A lot of reactions going on around that level. Boom, boom, boom. When it finally broke, boom, you had this big drop, came up here, you had a pullback reaction. We traded off this level before. I showed you, levels to trade off of. And there's your uptrend line. The yellow trend line was the one that I've had in recent videos and recent 60-minute charts that I posted on the site. That was broken this morning, triggering a sell signal. We came down, we hit it. Once again, that key 8,700 level bounced. It's good for a bounce trade. Made a perfect back test. This white one I had just put down as what I call a BOD, or benefit of the doubt trend line. I'm going to remove that now to not create any confusion. So there it is. Simply put, it's pretty straightforward to me. Breakdown there, hit support, bounced off support, back tested the trend line, and a rejection. And so far as I'm doing the video, we're starting to crack below 8,700. And as soon as I think as soon as the algos and the individuals that are trading realize that level is not going to be recovered, that this isn't going to just be another little brief whipsaw like that, then we should have a quick jog down here at 8,500, 8,505, and quite possibly more. Then you have the previous lows there from Tuesday. Take those out, and you get additional check marks for the bearish case. And if things go the other way, which is always a possibility, and I promise you this, you have a president and the whole political and financial machine. Most of the money in this world is concentrated in the big U.S. banks. There's a lot of vested interest, pension funds, and you start reading up. I've warned for many years about how underfunded the entire pension fund system is. The unfunded liabilities take a big hit like this. It's not good. So there's a lot of forces, but I'm a believer that there reaches a point that market forces take over, and any shenanigans by the Fed, well, we already see what happened there. There's what I call Powell's folly, coming in with bringing out the big guns at the absolute wrong time. There would have been a time and a place, I think, for a 50 basis point cut. Maybe even at the next meeting would have been best. Who knows? Maybe save it for more of a rainy day. We were rally mode there, but again, markets did what I said. That's why are you cutting 50 basis points, Powell? What do you see that we don't see? Is there a big financial institution about to fail? Are you, is there something else out there that the Fed is privy to that we're not? And that's so far, at least, again, that was my interpretation, but it seems the market didn't like that. And then they did. They bought it up the next day, rallied back, but it failed. So again, you will get. Let me just say this: you will get whipsawed to death, to literally pieces in a market like this if you were trying to trade off the news, if you're trying to track what's going on with coronavirus, if you're trading, in response to the Fed, or if you're trading to what Trump is tweeting or whoever else. At least that's the way I see. I trade off the charts with that first and foremost. Let the charts be my guide, because this, I promise, the headlines will follow eventually. You get a big rally, you're going to hear about why the fears of coronavirus are abating, or this and that, or another stimulus package announced by the Fed. But if we drop down, you're going to see some pretty negative headlines. And again, let's just watch the charts here, and that's it. We're below 8,700 now. Stick save is possible, but unless we get that, support has been broken, and that's the like I said, just clinging on by a hair right there. Let me just show you one. Probably about where we are now. I'm going to show you an extra line here on NQ for you NQ traders. And it's right here, about 86.52, because you have to look at these previous reaction. No, I'm sorry, right here, previous reaction lows, and that was it. We had a reaction low there, and as I go through here, we had a couple reactions off that level as well, some candlestick bodies and/or shadows. So that's it. Keep going lower. Floodgates may open. We're only down 2.5%. So if the market wants to drop another 1-2% or more, it certainly has room to, in a single day without becoming too stretched. Lately, 4% or so, that's about the cap. Not that it can't drop any farther, so be careful of that. But there it is, 8,500 next support, as I mentioned. And ES, I gave you this benefit of the doubt trend line. This is the same one that I had beforehand. I made it yellow today. Both of them broken, and that BOD, that secondary trend line, if you zoom in a little tighter, just like that trend line on NQ, we had a breakdown and a back test today and a failure there. And don't see a lot of support here. We had little support here where I'm putting the crosshairs about 30-30 on ES. It's a little surprising that so far, with these supports giving way, that we're not seeing a quicker swoon down. But who knows? Sometimes the market does this, inches down, and then all of a sudden the sell programs kick in, or maybe the market's going to hold up and recover and snap back up today. Maybe it's waiting for some type of headline that's about to come out that try to spark another rally, try to foil this drop in the markets. I don't know, but right now, we could look at maybe giving you a little downtrend line here to watch that could trigger a rally if it's taken out. Downtrend off the recent highs. Maybe we can do the same thing in NQ. I don't want to force it. No, I don't see. Yeah, it's about the same trend line on the ES, so we'll put it there. That's one to watch. That could trigger a spark, a rally up to that level again if taken out. But I'm still favoring this. And then finally go back to QQQ and NQ, and I'm just focusing on these now, guys. As I said, if you're wondering, hey, why aren't there more individual stock trades out there? This is a whipsaw market. This is, right now my focus, almost all my focus is on the indexes, because there's so much money to be made. I've had a field day trading today, in and out, over a half dozen times, long and short. Posted, I shared in one of the comment sections the 5 and 2 minute and 5 minute charts, is coupled with these 60-minute charts I went over earlier. Those have been, my guide for the in and out trades. But that's active trading stuff. That's stuff I'm in so quick, and then I'm out sometimes minutes or even seconds later if something doesn't look right. This is the swing trading stuff. If you are not a very active trader, and even then, right now, the bigger picture is this. Somebody asked me today about 401k money, and that's here. I try to revisit this every now and then, the weekly charts. This is a messy chart. I'm going to have to give you a clean board. But, here's a trend indicator I've talked about many times. Very simple and effective 20-month exponential moving average. We're still above that on both QQQ and SPY. getting close on SPY, and I've covered many other trend indicators that I use. I did a video just recently covering a half dozen or more intermediate and longer term trend indicators, and it's pretty simple right now. The long term trend is still solidly bullish right now. It's not. We haven't triggered. I'm not going to say it's not in jeopardy of flipping. That's one thing I can tell you is when the market turns, stocks tend to drop a lot faster than they rise. So just one big red candle here on SPY, one big monthly candle, as well as QQQ, could put us under that 20-month, and that's not my only long-term trend indicator. Again, I have a lot of others. I don't want to digress and get too far off task on this video because I've covered those recently. But I do want to show you the levels that I'm watching today. Again, coming back down to these 60-minute charts, and you can even look at the daily chart. Zoom in a little bit, fix that uptrend line. Yeah, that shouldn't be there like that. I think that's showing through from the 60-minute. Let me clean that up. Well, it is effectively the same one I showed you on the 60-minute chart, but there it is. This is our official trade there on QQQ right now. And T1, that's still the sole price target. So this one's kind of like oops, didn't mean to move that. That was our entry price. This one's sort of an all or none trade. Again, you can trade it however you want. I've given you other levels that could come in as support levels, but I think that's a very likely target if the markets break down here, which they look like they're about to do. So let me get the video out to you guys, and like I said, if you're swing trading and you're getting whipped to pieces in this market, either stand aside, watch, learn, or go with a trading plan. That's the one of the best pieces of advice I can give you. I've learned the hard and expensive way over the years. Have a trading plan for every trade that you take. What are you going to buy or sell, in short? Why are you going to buy it? Where are you going to buy it at? How much are you going to put into it? Where are you going to sell it if you're right, meaning your price target, and where are you going to sell it if you're wrong, your stop loss order. And then stick with that trading plan. If it's a solid trading plan, you bought or sold the stock for a reason, stick with it unless something compelling changes in the charts. So you guys know I'm flexible. I'm not a rigid trader. When I would had swing positions on Tuesday that I was going to hold out for a little more, and then when Powell came out and did the emergency rate cut, like I told you that day, I sold the bulk of them into that pop, and then set tight stops on the rest, got taken out, and that's it. So that changed. For me, it was actually a fundamental catalyst, not a technical catalyst, which is rare, but sometimes I will change on a fundamental catalyst that changed my plan at that time for those swing positions. So as of now, back short. Think we're going lower, and if that changes, I will do my best to get some charts and my thoughts out to you guys as soon as possible. But let me wrap this one up here, and yeah, I think that's about it. I didn't cover anything else, and intentionally I want to stick keep this on task, but everything's related. Remember, I do these videos. I told you the other day, gold was at resistance. If the market rallied, it would probably break down. Watch that trend line. If it did, that would have been your sell signal. We didn't get that, and I said if the market broke down, we'd probably break out and rally. So there it is. So that's that's how it works. This is a risk-off asset. Treasuries are risk-off assets. They're rallying. Crude oil is a risk-on asset. It trades along with the stock. Crude's broken down below that support level too. I told you I'd stop talking, but I just wanted to say this. So that's it. I'm done. Crude, disappointed today. Took out that 45.53 level. No more for me. I'm not going to short it here. I'm just focused on the equity markets, but that's how this works, and it's all interrelated. It is not mere coincidence that crude broke down today with the stock market breaking those trend lines and all that. This stuff and gold breaking out at the same time. Again, it's almost, you can blindfold me in some cases, show me only the charts, the S&P 500. I could probably tell you, on key levels at key times. It's not always this way, but tell you when gold's going to break out, or treasuries, and things like that. Because again, they're very, especially in a market like this when everybody's hyper focused on the technicals, those assets are very, very strongly correlated, either positively or negatively correlated, and it's not mere coincidence that gold and treasuries usually run up to resistance and stop there at the same time the stock market falls to support, and then both of them try to figure out, okay, which way we're going to go here, and it works like that. I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.